could be the next exciting growth opportunity for trade.
There's so many examples from the past of people learning how to operate in a more fractured world.
In today's episode of Studio Sessions, we're exploring the history of trade and what it might tell us about the forces shaping today's global trade landscape. I'm joined by Madhur, global economist and head of thematic research at Standard Chartered, and Edmond Smith, a professor and historian of globalisation, capitalism and economic cultures at the University of Manchester. Madhur, Edmond, welcome to Studio Sessions. Just to start us off, we're hearing a lot at the moment about the world being more fragmented and more complex. From your position where you sit, how are you seeing global trade at the moment?
The current state of global trade is definitely more challenging than it used to be, say, 10 years ago. There's clearly a lot of geopolitical stresses that are there. There are a lot of shocks that we have seen over the last 5 years, which have meant that there's a lot more uncertainty around trade. Having said that, it's very important to remember that we seem to be seeing a reorientation of trade rather than any collapse in trade. Even last year when we were hit by tariffs by Mr. Trump on pretty much all of his global trading partners, trade still managed to hit a record high of about $35 trillion. So that tells you that yes, there are lots of risks, but there are also lots of opportunities in trade.
And Edmond, you come from the historical perspective. What do you think?
I think it's really interesting because the shift towards a more multipolar world that we're seeing today can be understood, I think, if you take a long-term perspective, as something more akin to a return to historical norms. If we were looking back 200 years or 500 years, it would make sense to have the economies of India and China very much as dominant powers within the international environment of trade. So some of the challenges of navigating a multipolar world align with the experiences perhaps that came about through the emergence of a more globalized and more connected world. It's re-establishing trust networks that can cross between different institutional practices, the ability to place firms and agents in contexts that are perhaps more unfamiliar, and to navigate the challenges of fracture as a key part of doing business, which was so fundamental for the emergence of globalization, that I think we can see a context whereby we're returning to those sorts of important conversations today.
And thinking about that transition from more globalized to multipolar, from a historical perspective, can you talk more about some of the fundamental differences that we're seeing today that we weren't necessarily seeing before?
Yeah, I think there's a definition of globalization and how it came into being that I think is quite useful. That if we take it right back to the start of trade, we're looking at occasional, disparate, poorly integrated trading systems, and then building through luxury goods exchanges to constant movement of bulk goods and interaction through to integrated markets as sort of the pinnacle, I guess, of globalization. I think a multipolar world forces us to acknowledge that there's maybe a step back towards a fracturing that still allows, as you say, for this huge volume of goods to be moved, but not necessarily within the same system. And I think acknowledging that there's not necessarily a breakdown, we're not talking about the disintegration or the disappearance of trade, but rather the reordering, as you suggest, means that it's a requirement to acknowledge that different systems sort of operating within the whole are going to become more important, whether that's the south-to-south trade or the shift of economies, acknowledging that China can act in certain ways regarding international finance, say, or institutional regulation that the US might have played previously, I think adds to complexities, but isn't necessarily a threat to the overarching system and the growth of trade in the next decade or two.
I think a lot of people, a lot of firms are cognizant of this rise in the challenges to trade, but there are also some very interesting and smart workarounds that are happening that we should be looking at, and that could be the next exciting growth opportunity for trade. Where are the solutions coming from? Because I think the most important thing for me, and which is why I love the topic of global trade, is I do not know of any country in the last 70, 80 years that has grown without trade. Whether you look at China, whether you look at Korea, Japan, all of these countries moved from low income to middle income to high-income countries, or at least upper middle-income countries, because they have been able to integrate into global supply chains and trade chains. Without that, it's very hard to see an economy growing by itself. And that's why the importance of trade has to be acknowledged and maybe reinforced repeatedly. It's just that now there are new centers of trade. So just to give an example, in say 2000, South-South trade, or that's intra-emerging market trade, used to be only about 10% of global trade. Now it's about 25% of global trade. So clearly emerging markets trading a lot more with each other. And that, I think, is another very exciting avenue that's going to continue to grow over the coming years.
And I think if I can just follow on the point, I think the shocks that we've seen recently, one of the things that's been really interesting is that they've highlighted the importance of the material world within these trade flows that I think maybe at peak globalization have felt like they're almost inevitable movements of goods without friction that can cross borders. And I think it's re-established the need to consider a sort of systemic approach that integrates extraction of rare earth minerals or particular metals with the production of sort of component parts and then the integration into sort of the end point of that system, perhaps most prominently with the potential for AI and everything that goes into that on the material side. I think has both made a greater appreciation of the challenges that are there in the actual sort of the everyday movement of goods and what that entails, but also again highlighted the potential for competition among the struggle for resources or the control of particular parts of the system in ways that I think maybe would have been more familiar in the past but became less key or less familiar as part of the rhetoric of global competition in the past half century or so. And I think as that comes back, we'll see a shift maybe in the way that states acknowledge or the way firms acknowledge how access to particular markets and particular points of expertise function as choke points or key interlocutors within that global system.
Do you think the past is still a good indicator then of what we can expect to see now, but also in the future in the trade space?
There's so many examples from the past of people learning how to operate in a more fractured world, whether that's building an organizational structure that allows people to act more flexibly in response to shocks, or that has a greater degree of trust between different parts of the system to allow for it to roll with the punches and have a more resilient sort of organizational structure. I think both of these have potential to be useful, certainly, for how we manage perhaps with the future of trade, rather than perhaps necessarily predicting exactly which path it's going to follow.
Now, most countries are independent. They have the ability to choose trade partners. And now you have more trade partners to choose from, whether you want to trade with Europe, whether you want to trade with China, whether you want to trade with the US. Obviously, there are spheres of influence and, there is geopolitical risks that you have to take into account. But again, I keep coming back to the fact that there's lots of very interesting, innovations taking place which allow maybe even smaller scale firms to be able to trade. So whether it is digital, trade that's taking place, which allows, small firms in one country to be able to access firms in another country, that's quite interesting. The access to trade finance, again on a digital basis, again, very interesting development for small firms, because a lot of these firms maybe were out of the system because they didn't really have access to the traditional banking models. But now they can access all of these, and that makes them able to, aim higher in terms of the aspirations of how they want to trade and with whom they want to trade. And I think those kind of changes are really interesting. The use of AI, the use of technology is making so many more, channels of trade possible than before. Earlier, we did not really have too much services trade. It was largely goods trade. But now, for the last few years, it's really services trade which has been growing the fastest. And in particular, digitally delivered services trade has been the fastest growing area of trade, globally. And that again tells you that there are lots of different avenues that you can have. The rise of BPOs, the rise of, various tourism, travel organizations, so many things, the rise of data centers. All of these suggest that there are still avenues out there. It's just that it's taking a very different form from what we are used to. And different players are now coming into the picture than what we've traditionally seen.
think there's a useful link there to make as well, that when we're talking about the future of trade, we're no longer talking about the integration of completely new markets in terms of a whole new sort of continent, a whole new region of the world being integrated into the economy and providing this huge boost. It's rather ensuring that deeper parts of every economy, every market that we're talking about, can be integrated into that trade economy more effectively. And I think, with the exception possibly of the development of shipping routes through the Arctic as a consequence of climate change, we're probably not really talking about shifts in sort of the physical world of trade all that much in the 21st century, but rather changing technologies that make the trade that does exist more efficient, right, reach the correct people, and allow people to find the clients that they want to work with in a global space more easily, which I think is maybe the great barrier that can be pushed beyond.
Yeah, I think you're right. I mean, most people kind of, even as consumers, we have seen the benefits of trade, lower costs for us, greater variety of products available. So all of that is there. I think the real challenge is that we have a rise in protectionism, we have a rise in tariffs and non-tariff measures across a wide variety of countries that's happening, which would push up costs and trade friction. But at the same time, you have all these advances in technology, which are helping to lower the costs and make a wider part of the world available to you. Again, so which of these forces will win is going to be, I think, the key in terms of, how does global trade evolve over time. I'm betting my money on, the more optimistic version of AI and the rise of all these technologies will help us to trade more and integrate more, even those countries which are actually still not very well integrated into the trade supply chains, to become more integrated. But obviously, there's going to be periods of friction, and that's what the world economy has to kind of navigate and deal with.
And we've mentioned it a couple of times, but I think one of the great uncertainties we're talking about when it comes to the fracturing of unipolar world towards a multipolar is the impact that AI is going to have on the US economy in particular, but also everything else. Because I think in the most positive views of AI, it would be the idea that it allows America to regain its position of prominence in the world economy by so quickly accelerating productivity, that then perhaps some of this fracturing that we're talking about becomes less optimal in terms of people who are maybe seeing the opportunities in accessing different markets. If AI is so fundamentally powerful that it does change the US economy in that way, then perhaps you see a shift towards a less fracturing world and the re-establishment of an older later 20th century sort of global trading order. I think that even in that context, which is probably a bit too positivistic maybe, you're not going to lose the effort of people across the world to have a greater say and demand that institutions and that global regulations reflect their opinions and perspectives more. So I think even if the structure of global trade perhaps doesn't fracture as much as some of the predictions are suggesting, you still might see a demand for the reorganization of the sort of the levels above that in terms of regulation institutions.
Yeah, and we are seeing that in terms of how firms are, we have a very good survey that we do, which is called the Future of Trade Survey. In that, it's very clear that the foremost thing that most firms are looking to do to make themselves more resilient during all of this trade stress is to try and adopt some sort of digitalization of their of their firms. At the same time, they're trying to use more or strengthen their treasury management practices by using various technologies as well, making it more efficient, more cost effective. And all of this, is helping them maybe try and make sure that their supply chains are more resilient. And I think that's been a key focus for a lot of our clients over the last few years. When I've spoken to them, they all talk about the need to not necessarily shorten their supply chains, but to make them more visible, because at one point of time, supply chains had become so complex that you didn't know who your suppliers were and who their suppliers were. So it had become extremely complex and people didn't really know. So if you had one issue somewhere, an earthquake somewhere, your entire supply chain could be impacted because the supplier is not able to supply the goods. And I think they are trying to reorient that. They're trying to move away from a very long and complex supply chain to maybe more visible and if possible, shorter supply chains. At the same time, they're trying to diversify their suppliers. So it's not just China and the US. It could be China plus ASEAN, China and a few other countries. The fast-growing trade corridors are all Asia, MENA, Asia, Sub-Saharan Africa, Asia, LATAM. So you're seeing a lot more trade and a lot more diversification coming through. And what's really interesting to me as well is that there's a move for a lot of clients away from just-in-time kind of stock building. So people earlier used to have just enough stocks to meet whatever they needed for their immediate, short-term use. Now they've moved to just-in-case kind of stock building. I think it's more about who do we want to trade with and how do we make sure that we're resilient, as well as making sure that national interests are protected. And the use of AI, the use of regulations would help with this. I think this is another key challenge, that AI is moving very quickly. Maybe regulations and the security aspects might not be moving quite as fast. So how do you marry the two to make sure that things continue to move in a very frictionless and efficient manner going forward?
You've talked about the impact, obviously, on the organisations and also the markets that they operate in as a result of all of these shifting changes. What about the flow of capital?
Look, I think the flow of capital generally is very strongly correlated with the flow of trade. The main driver of trade over the last year has been AI-related goods. So China, Japan, Korea, they've done exceedingly well because they are the producers of AI-related goods, whether it's semiconductor chips or computers or things like that. They have done very well. They have beaten market expectations. More people will want to integrate into that supply chain. AI-related trade could be even things like critical minerals like rare earths. So it's not just, it's raw materials as well. So all of that is coming into play a lot more. And I think that's what's going to be driving the global trade story for the foreseeable future right now.
What about the impact on people and people's lives and, bringing it back down to that human level? What do you think we can expect there?
I think that prices will go up for certain goods that depended so much on a frictionless model of international trade. And unless there's spikes in productivity potentially brought about through AI and robotics and things, I think that seems a likely consequence of these changing dynamics for sort of the everyday experience of trade. I think the more concerning or perhaps more challenging impact that it might have on people's lives is the extent to which competition within the global trading landscape is allowed to build towards genuinely completing blocks or further barriers for trade beyond what we've seen already. I think, and this is where maybe the historical examples, as I said, are a dire warning, is the amount of times that trade and conflict and economic conflict have been precursors to deeper forms of violent conflict, warfare, more extreme competition between blocks. And I'd like to think that in the 21st century, enough people are aware of those legacies and keen to avoid that sort of deep competitive disengagement in the world economy. But that does depend, I think, on some form of reorganisation in the way that you describe that goes beyond simply slightly shifting trade flows towards maybe discussions about ways to better regulate and organise the world economy. You mentioned AI as being a huge challenge in this area, but questions around the World Trade Organization and its troubles over the past few years, I think, are only going to come further and further to the fore and need to be resolved so that there's not an even bigger impact, I think, on people's lives.
Yeah, and I think I have to say that, the impact on labor markets is actually a very key issue for many emerging markets in particular. I don't know of any economy which has really grown very rapidly without being integrated into global supply chains. But usually what happened in the past is that you could move masses of labor away from agriculture without too much education, without too much skill building into manufacturing. Now, if you have robotics, if you have AI, which allows you not to have to invest in a low-cost country, but you can have onshore production units, right, with the help of robotics, with the help of AI, with fewer people involved, then the key risk is that the one USP you had, which was, that you're a low labor cost center, and so you're very attractive to any foreign firm to set up, starts to erode. Of course, that's not the only reason why people set up in these emerging markets. It could be for domestic demand, it could be for various other things, but clearly that is a threat. And how do you deal with that threat? How do you upskill yourself? How do you reskill yourself to make sure that you are able to live in this kind of changing landscape? And the second thing I think, which is also very important, which the money is also going into those centers which are AI-driven centers. So a lot of the money of the last year has gone into the US, has gone into, say, Korea or Japan. But then the emerging markets need that capital to be able to grow. So how do you make sure that you continue to have the access of capital, international capital, which emerging markets are very hungry for, which they need to continue to come to them? A lot of countries have already started to move in that direction. So you are seeing data centers being set up in Malaysia, Indonesia, India. They're already trying to keep up. But clearly there are lots of challenges as well. And it's not just the developing countries, even the developed countries, people are worried about where Europe stands in the whole AI boom story. China and the US are clearly the ones who are leading the AI game. What about Europe? So there are lots of questions which still need to be addressed, and it is a changing environment where I completely agree with Edmond that we do need some sort of a rules-based system, which the WTO used to provide. That has been undermined quite a lot over the last few years because of unilateral decisions being taken by countries. And how do you continue to have a rules-based system for the world economy so that it helps more regions to participate in the growth story, not just a few regions?
I think it's an interesting question with developing markets and the role of labour as a key, the core product that they can make available, and how that fits into maybe changing expectations slightly about the idea that I know was popular maybe 5-10 years ago about the 21st century being Africa's century as sort of the great growth market, great growth potential, and how the story that you've just described maybe changes that, where the demographic boom that's expected in Africa coincides perhaps with changing conditions for how you can integrate into the world economy. I think there's been some positive signs by efforts to move beyond a people-focused model and towards the acknowledgement that energy and raw materials are central to these changing practices too. But there's so far to go, I think, in ensuring that places that have access to some of the most important material goods for the AI, for the energy shifts that we're talking about in the 21st century, are able to benefit and develop those within the context of their local or regional economies, rather than perhaps falling into a more extractive system. I think one of the hopes maybe in the fractured world sort of model that we're talking about is that they'd have more opportunities to negotiate with more powerful trading partners to ensure that more of the sort of value added from trade is brought in country. And maybe that's a hope for how emerging economies like these could use that for competitive advantage themselves.
Yeah, in fact, to your point, there is a lot more horizontal trade, as we call it, going on. So horizontal trade is basically trade between two countries which have similar income levels. Usually in the past, it used to always be vertical trade, where a developing country would be providing raw materials to a developed country, and the developed country would then send across your finished goods to you. And that was the dominant form of trade. But now things are changing. They're becoming more horizontal. That's part of the reason why South-South trade has picked up. And of course, China being the main reason. But again, part of the reason that South-South trade has picked up is because of horizontal trade. And, the one thing, though, I would like to say on the employment side is people have always feared that technology is going to lead to job losses. And historically, technology has always led to more jobs being created than job losses. You didn't have the classic example is that first you used to have bank tellers, and then bank tellers were replaced by ATMs. So that's like a big job loss. But then with the ATMs came the ATM technicians and other types of jobs, call center jobs. So lots of new jobs are always being created, and I think this time around too we are likely to see new jobs being created.
And what about from a historical perspective, Edmond? Obviously, there has been technology advancements in the past that will have had an impact on trade, and obviously there is this pace consideration here, but are there still parallels that we can draw on, lessons that we can maybe learn?
I think the point about pace of change is really important, because the invention of something like the steam engine in the 18th century took about 90 years before it came from first commercial use to being sort of deeply integrated into a significant part of the economy. And that gave more time for people to sort of reconceptualize what that would mean for the political economy, what that meant for people's involvement in work, what that meant for the regulation and education and training and so on. While I think with the advances that perhaps offer a more positive analogy from the past would be looking at things that have sped up communication and the ability for people to sort of shrink time in their daily lives, whether that's the use of telegraphs and telegram systems to connect the world during 19th century globalization, so that you could then have the immediacy of contact. If AI allows for decision making to happen at even greater pace and perhaps overcome some of the frictions that a more fractured trading environment will create, then maybe there you see the possibilities for AI doing things sort of as an information system rather than maybe as a manufacturing connected or sort of labour system that could have more immediate and positive gains for local and global economies, which might be more positive.
We've talked about capital flows, obviously, but thinking about financial institutions specifically, how have they historically played a role in global trade, and are we starting to see a change in this current environment?
I feel that in some ways now banks, especially banks like ours, are in a position to be super connectors, as we call it, across the globe and provide access to trade and trade finance to a much broader range of clients than just the big firms. You can go down to the smaller levels as well, because it's becoming a lot easier in some ways to do things online. And I think that's the role that is likely to be played by some of the banks, especially the global banks.
Yeah, I mean, the reason I became interested in merchants as historical actors is because they serve this unique role pretty much from the emergence of human civilization through to the present day, where they're the figures who pass from one society to another. They're about crossing borders. They live lives as strangers in strange lands. And the institutional changes we see, whether it's the advent of corporations or the role of diaspora, is giving people, these individuals, a means to operate that gives them the expertise of their home locality, the ability to know the precise local expectations and customs and practices of the market in which you're embedded, as well as your organisation or your investors back home, will become more and more important again. And I think the specialisation of those interlocutors within a more multipolar system are a real feature of what's required for effectively working in this sort of environment.
You spoke about obviously needing the expertise and the presence on the ground in the markets that we operate in being so important, and we describe ourselves often at Standard Chartered as a super connector. Do you think that definition has changed?
I think now the word super connector becomes even more important, because now all of those challenges are existing, where the rules of engagement could change very quickly. It's not just about the provision of capital, which is of course very important, but it's understanding how these dynamics are playing out, how everything is changing, and how can you still then navigate the system so that your trade doesn't stop. I think that's going to be the real crux of any good banking client relationship. That's where banks like ours do well, because we do have that presence in those markets which are seeing the fastest rates of growth.
Edmond, I wondered if you could share a bit more about the impact that all of this that we've discussed is having on currency.
Yeah, one of the things I think is so important is the potential for technology to make an impact on some of the ways in which finance is used in these environments, most notably related to stable coins or wholesale central digital bank currency and blockchain-enabled settlement. I think the role of the dollar is something that's come up an awful lot in conversations around the topic and isn't likely to go away. I think the idea that de-dollarization in a sort of fundamental sense is unlikely. But how that's shifted perhaps to a smaller part of the market and people are able to take advantage of other forms of currency around the outside of the system and perhaps use or create new financial systems to overcome the potential challenges of a more competitive, more muscular US in terms of tariffs and controls of things like access to SWIFT payment systems and so on, open opportunities for people to maybe step outside or recreate parts of the financial landscape that wouldn't have been imaginable just a few years ago.
The 2 points that Edmond's raised is so important because we have so many conversations around this. We're not just seeing stable coins or stable coins in particular as a currency. We are seeing it as part of the new infrastructure in which trade will be governed and organized. It is going to be part of the new infrastructure because we are moving to a more digital world, as I said. As I said, the fastest growing area of trade is services trade, which is digitally delivered. And so we are going to see a lot more focus on the use of stable coins. But at the same time, China's importance in trade obviously means that there will be a push towards RMB internationalization. There will be more opportunities for people to trade more in RMB. But again, I have to agree with Edmond that this is going to be a very slow process. It's very hard to see an alternative to the dollar as of now. Stable coins is also backed by US Treasuries. The stable coins that are most used are backed by US Treasuries. Again, that's US assets. So people piling into the US dollar rather than, exiting the US dollar as of now. Of course, people will want to diversify on the margins. Central banks might want to diversify on the margins, but the retail investor is still piling into US dollar assets, whether it's US equities for AI or it's US Treasuries or it's stable coins. These are all US dollar assets. I think that's going to sustain for some time still.
And just thinking about this reimagining, if you were both to distill down one key takeaway that you would like our listeners to take from today, what would it be?
There's a guidebook for merchants that was written in the 16th century that starts by telling all young traders to go into the world, which is a world of equilibrium and fairly shared power dynamics, that the best thing you can do when you reach a foreign country is to act with humility and respect the customs of the people that you're dealing with. And I think in all times that's valid advice, but I think in a more fractured and a more competitive and contested global environment, being aware and empathetic and being able to build perhaps from the perspective of the people that you're doing business with rather than where you come from will become more and more important to ensure that these fractures don't become something more savage and contested in the future.
Oh, that's a really nice thought to end on. I think for me, it's just going to be that, look, we are obviously in very challenging times. The way the world economy is organized politically, economically has shifted a lot in the last decade or so, and especially the last 5 years. And global trade obviously is an offshoot of that, so that's changing as well. But I think that there are lots of things to be positive about. There are lots of developments that are happening which are exciting, which can offset all these challenges. So I will sit in the camp of let's be excited about those developments.
Amazing. Nice to end on a positive note. Thank you both so much for joining us today.
Thank you.
Thank you.